Hey everyone, welcome back to Corporate Decoder. Today we're diving into Verde Clean Fuel's latest annual report. Now, if you think reading SEC filings is boring, just wait until you see what kind of financial twists and turns this clean energy company has in store. Let's just say their path to profitability isn't exactly paved with sunshine. This clean fuel company wants to turn trash and gas into gasoline. Sounds great in theory, but how are they actually doing? Spoiler alert, they're not making money yet. Let's dig into their Form 10K to see what's really going on. Right off the bat, this report is for the year ending December 31, 2024. Keep that date in mind as we go through the numbers. This is their official yearly checkup where they lay out all the good, the bad, and the potentially ugly details about their business. Like any good report, they have to warn us about the future. Be prepared for them to say things might not go as planned a lot. They mention things like not being able to develop new projects, getting financing, or even changes in laws. The whole field of renewable energy is subject to a lot of governmental direction, so you should expect them to say this. Their main goal is to build and run plants that can actually make gasoline, so this makes sense to be the first risk. If they can't get these plants up and running, then it's game over. Also, it says that they don't have any revenue and have net losses. The next major risk involves the fact that this might continue. It might be hard to see from the outside, but this early stage company has a limited operating history. They have never made large-scale commercial gasoline. So if you are thinking about investing, it's extremely risky because there is very little to compare with. They face the same problems that everyone else does. Any delay or problem with getting equipment, hiring people, or finding materials could make things difficult, especially in today's world. Because they are a relatively new company, this exposes them to some price risk when it comes to gasoline or biofuel. Those markets are highly volatile and are subject to current market conditions. A lot of what they do hinges on being able to get these carbon credits from the government. If they can't get them, it could really hurt their business. The company is very exposed to possible environmental rules and regulations. Any failure to comply can result in business interruptions that could badly affect their operations. Now, for a bit on their stock structure, they are considered a controlled company because a small group of people have most of the votes. This means they don't have to follow all the rules that other public companies do, which could leave regular investors with less protection. They also have this agreement called the Tax Receivable Agreement, which means they could have to make big payments for certain tax benefits they get. This is important because those payments could be significant. If they can't defend their patents, someone could steal their ideas. That means more competition and less success, which would make things tough. Alright, let's get into the hard numbers now. We are going to skip to the good part, the financials. Alright, we can see that for the year, general expenses are almost the same, 11.2 million versus 11.5 the prior year. This doesn't seem to be an indication of a good or bad thing, but it's notable that those expenses are not going down as they are building the business. The company made roughly $1.2 million just keeping money in their bank account. That's pretty neat. So this is important. During the previous year, for 2023, 30,000 warrants were exercised, bringing the company roughly $300K in cash. Pretty good. If the current stock price continues to increase, then more and more would get exercised, bringing in even more money, but they are not currently there and could expire worthless. They lost almost $9 million in operating activities during both years. It hasn't improved a single bit. They say they will receive $50 million, but this doesn't change that they spend almost $10 million a year. The good news is that if they can build that first plan, this number should drastically change. They mention this new 1% tax rule regarding corporate stock the IRS might be coming for them. In terms of growing, a lot of their success hinges on keeping good relationships with Cottonmouth and potentially future strategic partners. If those relationships go south, they're in trouble. Now, they have to give us a look at their common stock. They warn us a bunch about their stock. It will fluctuate because they are a new company. One thing they do mention is that the US infrastructure investment will help their industry. Keep in mind that all this is up in the air as it is in the hands of the government. In a scary note, the company has identified weaknesses in their internal control over financial reporting, which required them to remediate. This just means that the people in charge didn't use best practices during the handling of financial reporting. It seems to be remediated, but it's still there. They are an emerging growth company, which means they get some breaks on certain rules. Almost all of their property and equipment exists as construction in progress, meaning all their spending is going towards trying to build that first plant that will hopefully turn all of the business fortunes. Patents are their backbone. If those patents get challenged or copied or the law changes, they could be in big trouble. Remember that earlier point on tax issues? Now, this tax agreement could make things even more complicated if there's a change in control, meaning a merger or something similar. It could trigger big payments. Now, looking at this report as a whole, Verde Clean Fuels has potential, but a lot of hurdles to overcome. They need to make sure they get those government credits. They need to bring down expenses. The big thing is, if they can get their first commercial plant running and manage the legal and financial details carefully, they might just make it, so they need to execute their plan well. That's all for today's Corporate Decoder. If you found this breakdown helpful, please like, comment and subscribe for more deep dives into the world of corporate filings. Thanks for watching.